What if I told you that Warren Buffett has been saying things for decades that most people have technically heard, but almost nobody truly understands in time? Not in school, not at work, not in those short, feel-good clips on social media, because the real lessons aren't loud, they're simple, and that's exactly why people ignore them. Buffett never said you need to be a genius to build wealth. He never said you need to get lucky. But if you really pay attention, there's one idea hidden in everything he teaches. If you rely on a single source of income, you're playing a very fragile game, no matter how much you earn. And here's the uncomfortable truth. The biggest financial risk isn't having too little money. It's having only one way to make it. Most people don't realize this until something breaks, until the job is gone, until the income stops, until they're forced to start from zero. In this video, I'm going to show you the mindset, the strategy, and the 7 income streams that quietly build real financial security over time, the kind most people overlook until it's too late. So if a part of you keeps saying I'll start later, you might want to watch this all the way through, because one decision you make today can completely change how your future looks. Let me ask you something quietly, honestly, without rushing past it. When was the last time you felt in control of your money? Not hopeful, not temporarily okay, because this month worked out. I mean truly in control. The kind of calm that doesn't depend on your next paycheck arriving on time. The kind of confidence that doesn't disappear the moment an unexpected expense shows up. Most people don't experience that feeling, not because they're careless, not because they don't work hard, but because they've built their financial life on a structure that was never designed to be stable in the first place. A single stream of income feels normal because it's common, but common and safe are not the same thing. One salary, one business, one source of cash flow is not security, it's exposure. It's a system where everything depends on one moving part continuing to work perfectly, and life rarely cooperates like that for long. Jobs change, industries shift, health intervenes, economies tighten, and when your entire financial life is tied to one source, even a small disruption can feel like everything is coming undone at once. That's not fear talking, that's reality that most people avoid thinking about until they're forced to face it. Now here's the part most people don't like hearing. The difference between people who struggle financially for decades and people who gradually build real independence isn't luck, intelligence, or even income level. It's structure. It's how their money is arranged. People who build wealth don't rely on one stream. They build multiple streams slowly, deliberately, and often quietly. They don't do it all at once. They don't quit their jobs and gamble everything on a big idea. They build layer by layer, one stream at a time, until their financial life no longer depends on a single point of failure. And the reason most people don't do this isn't because they can't. It's because they delay starting. They assume there will be a better time, a clearer moment, a point where everything feels ready. But readiness is a moving target. Life doesn't pause and wait for you to feel prepared. It keeps moving, and every year of waiting is a year when nothing was built. Think about this carefully. Time is not just something that passes. In finance, time is something that multiplies. The earlier you begin, the less effort you need later. The longer you wait, the harder everything becomes. And yet, waiting feels safe. It feels responsible. It feels like you're avoiding risk. But in reality, waiting is one of the riskiest financial decisions a person can make because it guarantees that you miss the one advantage you can never replace, which is time. You can earn more money later. You can learn new skills later, but you cannot go back and invest earlier. That opportunity disappears quietly, without warning, and most people don't realize its value until it's already gone. So instead of talking about complicated strategies or unrealistic promises, let's bring this down to something practical and real. Multiple income streams are not about doing everything. They're about doing something and then building from there. The first stream that deserves attention is one of the simplest and most underestimated, which is owning assets that pay you consistently. Dividend-paying investments fall into this category. The idea is straightforward. You own a piece of a business, and that business shares a portion of its profits with you regularly. You're not trading. You're not guessing. You're not chasing trends. You're simply holding something that produces income over time. And when you reinvest that income, something powerful begins to happen. Growth starts feeding on itself. Your money begins to generate more money, and that new money begins generating even more. It's not fast, and that's exactly why it works. Slow systems are often the most reliable because they don't depend on perfect timing or constant decision-making. They depend on consistency. But consistency is where most people struggle, not because they don't understand what to do, but because they underestimate how difficult it is to keep doing it when emotions get involved. Markets rise and fall. News becomes dramatic. Fear feels logical in the moment. And that's where the second stream comes into play. Broad market investing through index funds. Instead of trying to pick individual winners, you participate in the growth of entire markets. You spread your risk across many companies, many sectors, and many outcomes. Over time, economies grow, businesses expand, and markets tend to move upward, despite temporary declines. But the challenge isn't the strategy. The challenge is sticking with it when things don't look good, because there will be periods when everything feels uncertain, when values drop, when headlines predict collapse. And in those moments, the difference between success and failure is not knowledge, it's behavior. The people who continue investing during uncertainty, who remain disciplined instead of reactive, are the ones who benefit when recovery happens. And recovery always happens, even if it doesn't feel like it will in the moment. Now, not every income stream needs to come from the stock market. In fact, diversification across different types of income is what creates real stability. That's where real estate enters the picture, not necessarily in the form most people imagine. You don't need to own a physical property to begin benefiting from real estate. There are structures that allow you to invest in income-producing properties without managing them yourself. These provide exposure to real estate income while avoiding many of the operational challenges that come with direct ownership. For someone just starting out, this approach offers a balance between accessibility and diversification. It allows you to participate without becoming overwhelmed. At the same time, there is another category of income that often gets overlooked because it doesn't look like traditional investing. It comes from what you already know, your skills, your experience, your understanding of specific problems that others are still trying to figure out. There is value in that, real value. But most people never package it in a way that creates income. They assume it's not unique enough or not advanced enough. But usefulness matters more than uniqueness. If something you know can save someone else time, reduce their mistakes, or help them move forward faster, it has value. And when that knowledge is structured properly, it can generate income repeatedly without requiring your constant involvement. This type of income doesn't depend on markets or external conditions in the same way financial assets do. It depends on your ability to create something meaningful and deliver it effectively. Then there is the more traditional path within real estate, which is owning property that generates rental income. This path is more demanding. It requires capital, decision-making, and ongoing management. It comes with risks that need to be understood and planned for, but it also offers something powerful, which is the combination of cash flow and long-term appreciation. Over time, property values can increase, while rental income continues to provide monthly returns. Done correctly, this becomes a stable and tangible income stream. But the key word there is correctly. This is not about impulse decisions or emotional purchases. It's about careful analysis, understanding costs, and treating the process like a business rather than a shortcut. Another stream that operates differently from both stocks and real estate is lending. When you lend money, whether through structured platforms or traditional instruments, you are essentially stepping into the role of the bank. You provide capital, and in return, you receive interest. This type of income behaves differently from market-based investments, which makes it valuable from a diversification perspective. When one part of your financial system is under pressure, another part may remain stable. That separation is not accidental. It's intentional, and it's one of the reasons multiple income streams provide resilience rather than just growth. And then there is the simplest stream of all, the one that almost feels too basic to matter, which is earning interest on the money you already have. Cash sitting idle loses value over time because of inflation. It quietly becomes less powerful while doing nothing for you. But when that same cash is placed in environments where it earns even modest returns, it begins contributing instead of eroding. It may not feel significant on its own, but combined with other streams, it becomes part of a larger system that works together. What all of these streams have in common is not complexity, it's intention. None of them require perfection to begin. None of them require you to change your life overnight. They require a decision to start and a willingness to continue. That's where most people hesitate. Starting feels like a commitment to something uncertain. It feels like stepping into something you don't fully understand yet, but waiting doesn't eliminate uncertainty. It just delays progress, and over time, delay becomes its own kind of risk. If you look at people who have built financial stability, you'll notice something consistent. They didn't start when everything was ideal. They started when it was imperfect. They made small decisions repeatedly. They adjusted along the way. They learned by doing rather than waiting to feel ready. And gradually, those small decisions accumulated into something meaningful. Not overnight success, but long-term change. So instead of asking how to build everything at once, ask a simpler question. What is one step you take now that moves you in the right direction? Not a dramatic step, not a risky leap, just a clear beginning. Because once something exists, it can grow. Once a system is in place, it can be improved. But nothing grows from inaction. At the end of all this, the idea is not just to make more money. It's to change your relationship with it, to move from dependence to control, to create a situation where your life is not dictated by a single source of income that can disappear without warning. Real financial strength is not about having more. It's about having options. It's about knowing that if one thing changes, everything else doesn't collapse with it. That kind of stability doesn't come from a single decision. It comes from a series of decisions made over time, often quietly, often without immediate results. But those decisions matter. They shape what your future looks like long before you arrive there. And the moment that process begins is not some perfect point in the future. It's now. Always now. Because the only time you ever actually have to change your direction is the moment you decide to take it.